All right, sit down. It's time to get started. Welcome, everybody. It's Don Kaufman here. TheoTrade chat. Oh, it's bright and early on this Thursday morning. S&Ps are down some 31 handles. So you have 3 minutes to go to the cash open. And one thing I've been mentioning a lot lately is that in the pre-markets, some of the price action hasn't really meant a whole hell of a lot. Hold that thought. So that is because there's been absolutely no volume. What do we got here today? We actually got some size trading. There is some size trading this morning. You're doing almost 200,000 contracts, which is exactly right now is 80,000. This right now is 80,000 contracts north of where we were yesterday at this exact same time. So there's, if you will, almost double the volume. So now there's some price action. Now you want to start to pay attention. Why do you want to start to pay attention? Not because we're up or because we're down, but are there going to be higher degrees of correlation this morning? So we look at the financials this morning. Where are the financials? And the bid and offer, they're down. Not significantly, but they're down. We're going to look at the energy sector this morning. Where is it? Okay. Mildly down. Okay. We start looking though at specific, stocks inside of tech. So it's obvious that the Nasdaq is down, but looking at tech, okay. So Broadcom is actually going to be called a little bit lower. You've actually got Tesla a bit lower this morning, Nvidia a bit lower, and just go through some of the usual suspects. Pretty much across the board, we are going to see some sell side activity. Amazon is relatively flat into the open. You've actually got Microsoft. Again, nothing is down. Okay, substantially. Apple's even got a bid under it. Nothing is down substantially, but what you can discern immediately just from looking at this market, in 30 seconds, we were able to determine the advanced decline line is going to be significantly worse than it has been in recent sessions. There's a much higher degree of correlation, which is exactly why the volatility is moving. Okay, you got vol on the move. I mean, vol didn't do anything yesterday. You're like, what the hell, man? What the hell? Vol didn't do anything yesterday with the marketplace down. So today, you're actually going to get higher degrees of correlation, which immediately, okay, sparks a little bit of a fire inside of volatility. The other aspect is, and I've been talking about this for a freaking week, you threaten 110, you're going to threaten everything that has high beta, and high beta is getting freaking hammered today. They're killing high beta by 4 or 5%. We're going to talk about that after the cash open. So coming into this cash open, you're going to open with fairly heavy negative ticks. You're obviously going to have a negative advanced decline line. I shouldn't say obvious because that hasn't been that obvious lately. Let's come to today's opening bell. As I was saying about the advanced decline line, it's not full-blown correlation, not by any stretch of the imagination. Okay, but the AD line, look at this. There's order imbalances this morning. And that's unusual. Huh, very unusual. There were several stocks that were held there for about 5 seconds at the open. All right, so some order imbalances. So the advanced decline line is, well, more negative than we've actually seen. You're going to see some sparks fly here at the cash open as well. Ticks, negative. One of the things I want to cut to immediately, okay, probably the preeminent area of discussion for this morning is going to be inside of the SPX, okay? We are going to hit the lower edge of the expected move. There's a very high probability of occurrence of that in the first, 30 minutes today, and we'll see if this is going to play out. For those of you that have the trade on, we do in fact have the butterfly specifically sitting at 65.80. That butterfly, it should be up between, 120 and 140%. If I were to look at my butterfly, let's go to my fly. Yeah, not bad. Not bad. There it is. Okay. So should be between 120 and 140% return on that one. It's weird because I'm like, I traded the butterfly here on Tasty, but I'm showing you the butterfly over on Thinkorswim. I'm so confused. Anyway, I know that I have the butterfly on, but I also know that I'll see it 65.80, or I will see. Oh, I will not bail out of that trade, okay, until we actually hit that little monkey right there. And we'll see. We'll see how that actually plays out today. So we have a fly. Yeah, everybody have their fly on? Huh? Who's got a fly? Who has the fly on? People bailing it already for 150%. Okay, did you actually bail? Okay, did you bail? If you had the butterfly on, it's been a while since we've actually hit one. Just killing it in the beginning of this year. Like, I mean, I hit so many flies that I paid for flies for the whole year, free flies for the whole year. S&Ps anyway are down 40 handles right now. Let's not get too hopped up. Okay, look, if it's going to happen today, look at this, the advanced decline line still hanging in there. Today, my opinion, this is the first day we've actually shaped up to see some real sell side activity. Okay, that's just my opinion right now. This is the first day we've really shaped to see some sell side. One of the aspects worth noting, the financials. Okay, there's already an attempt in a bid here. There's already an attempt in a bid here. Okay, the monkeys are out and working hard. All of a sudden, we don't love AI. Ooh, wow, Tesla's getting smoked into the open. Okay, yeah, that happened. That was a 6-point drop in 2 minutes. Okay, 6-point drops in 2 minutes. Forget what I was saying a minute ago. 6-point drops in 2 minutes. That crap should not be occurring. That kind of volatility is unruly for even something that has 60% implied volatility. Like, again, you can sit and you can kind of calculate, expected moves and so forth. And the expected move, you can say, well, no, that stock could move as much as like, $30 in a given week or whatever it is. And in fact, if you take a look, the expected move between today and tomorrow is still $14. And I'm just, but if it can move, let's say 30 or $40 in a week, should it be able to move $6? Okay, it's more than $6. Right now, we've moved $7. Okay, just from the bell, $7. Okay, in one direction, in the first 4 minutes. Okay, should you be able to move a quarter or a third of your expected move? Okay, in 4 minutes, and this right here. Okay, this is where server-driven markets. Where a lot of people, I was listening a bit to Garrett. He was talking about AI. This is where AI wouldn't react. Algorithms do. The speed of trade in the near term, okay, it's actually increasing, not decreasing, which is an interesting and probably unexpected twist to better technology. Better technology, okay, is actually causing these almost like aberrations in the marketplace. It's like cracks are forming in markets. This is a kind of a move that, mathematically speaking, when your expected move is like $30 on an entire week, it doesn't say that you can't move $7 in a few minutes. It doesn't say that. But a 60% volatility really shouldn't, even though that's high volatility, really shouldn't equate to $6, $7, $8 move in a minute. And we've seen a lot of this lately, especially at the cash open. So along with retail clientele, the algorithms attaching to it, the interesting and again, the twist that I don't think that I saw, and I don't think anybody in the industry saw, we all thought for years that algorithms and AI would create more efficiency. And I'm talking like, this is 15 years before AI was even going to be like real, we always thought that like AI would create more efficiency in the markets, and that when I say efficiency, like everything just comes together beautifully and volatilities collapse down. Okay, the opposite is actually being shown on here, because you're getting a war of algorithms, and that predictability nature of markets, okay, is actually being pulled. So in the war of algorithms, even though as Garrett was saying, you get registered investment advisors and so forth, okay, this isn't about underperformance or outperformance. This is about extraordinarily fast moving markets, okay, to where the volatility, okay, doesn't necessarily designate that. There are a lot of trading strategies, specifically around moves that are dramatically larger, okay, than the market is accounting for. But in this particular case, it's quite lovely to look at Tesla. It's a move from 435 literally to 427. Okay, that, people, is some violence in trade that I don't want to say shouldn't occur. It shouldn't occur even a 60% implied volatility. As I was saying a moment ago, there was an attempt this morning to rotate. You can see some rotation towards the energy sector. Okay, you can see some rotation, okay, that was attempted here in the financials, falling back down. Your advanced decline line is actually holding tight. Okay, this is a fairly serious situation, and I will always bring this up no matter the day. I don't give a damn. Okay, if you're in a situation where you have almost a 50-50 advanced decline line, but the S&Ps are down 0.7, the NASDAQ is actually down 1%, that's a serious situation. And the reason it's a serious situation is we haven't seen higher degrees of correlation in a considerably longer period of time. Like, when was the last time that we really saw, like, boom, there's like 100 stocks trading on one side? It's only been for brief and fleeting moments in the last couple of weeks. I mean, it's even more than that. Like, the last time we actually, even sold off to any extent, okay, it's been like weeks. Right back here, we actually saw some higher degrees of correlation, okay, back on, like, the September 2nd. After the Fed announcement, we saw brief like degrees of correlation in here, but there just hasn't been. And I tell you that this is a serious situation because the advanced decline line, even as we've decayed here in the marketplace and we've sold off, and you can see, like, we've sold off, right? So you sold off since the bell, okay? Whatever, it doesn't matter. I told you already, we're going to the lower edge of the expected move. Or anyway, okay, that's, chicken's done. That's not the cause for concern. The cause for concern is the remainder of your day. The remainder of your day includes 42 other things that you could sell in the S&P 100. Some of those things you could sell, okay, are, for instance, like Apple, okay? You don't want to see a stock like Apple up. You don't want to see energy up, because if energy is up right now, okay, they'll pummel the entire energy complex in line with everything else, okay? Volatility sees it. Volatility sees it this morning, and we haven't even correlated, right? We're nowhere near correlation. You're 60-40. I mean, hell, this is like a 50-50 advanced decline line. This is where crap gets serious and serious in a hurry. But the marketplace, okay, is in kind of a threatening posture. The volatility movement is real today, much more so, again, than you've seen in weeks in this marketplace. So be aware of that. Now, I will absolutely price my SPX butterfly as we hit the lower edge of the expected move, okay? We're going to come in here, highlight this little monkey, close the position, okay? Closing order. So my butterfly right now is jumping all over the place. Just calm down there, little cowboy. The butterfly is going to jump all over the place. First of all, the SPX, okay, is 3 points off the center. It's home. All right. When I say 3 points off the center, what I am talking about is right here. Like, literally, what's going to happen here? We're going to come down here. We're going to breach right through it. We're going to sit on it. We're going to do a little dance. We're going to make a little love, and we're going to get down tonight. Okay, because we are hitting right now, okay, your butterfly. So butterflies hit. Okay, when you are the at the money strike, when you're the at the money strike like this price is going to jump around a lot. What do we pay for my fly? Okay, I think I sent this fly out at 55 cents. Okay, I think I sent it out. Yeah, I sent it out at 55 cents because I know I filled it. Some of you guys maybe filled it even a little bit lower than that. So I sent the fly out at 55 cents. What you want to do, okay, is you kind of work a credit like this somewhere near, like, I know it's fluctuating in mid price. I don't think I could fill $1.55 right now, but I'll tell you what, I would take it, okay, because then you're looking upwards. Again, if you filled $1.55, you're looking at upwards, 150, 160%. That's not exactly spectacular, okay? Like, you would hope that this thing would have hit, even on a Friday, but look, you're going to have to basically take what the defense gives you here. So I'm going to work it around $1.55. If you see the mid price, I do want to point this out. So down below, you see the mid price kind of jumping around a lot. It's because you have four options that you've traded. The bid offer spread here is spectacularly tight, not wide. Look how tight the bid offer spread is. We're talking about a $6,500 product. Freaking markets are 10 and 20 cent wide, but you're dealing with four options. Four, because this is 1, 2, 3, 4, right? So you're dealing with four options, and it makes sense the bid offer spread's going to bounce around. So you have to kind of lead into this a little bit, right? And kind of run ahead of it, if you will. So I'll work in order at $1.55. As I said, I don't think I fill $1.55, okay? But it's plausible that I can get very, very close to this as a fill. So we're working right now, and you don't, I know there's going to be a lot of fear, like we're just going to cross through it. Just for the most part, we just crossed through the lower edge of the expecting. It feels like we're just bottom's going to fall out. We should reverberate back up into it. Okay. You should. This is where things should mellow out, like right freaking now as they do it. Right now, they should kind of mellow out. And if it mellows out a little bit, you're going to have a pretty good chance of getting a decent fill. What do I really think we're going to fill at? $1.40, $1.45. I think we could probably fill. Okay. I may do what's called bang out this order, which is just get her done, because we're pretty unstable right now in the overall marketplace. And I mean, listen, there's a chance we miss it, these butterflies, things work quickly. That's kind of where I think I can fill. Still not filling in there. You'll notice, okay, two of them are basically in the money. All we have to do is just hang out in this neighborhood for a minute and we should receive a fill. Question is, can we do it? Okay, I got to tell you, this is quite alarming. That little bounce right there faded right back into it. Okay, we should mellow out, pull right back in here and get the fill at $1.45. And as they said, that's when you do a little dance, make a little love, get down tonight. Markets should mellow out on this. If they don't, all hell is going to break loose today. Okay, I'm just going to throw this out. It is a lesser probability. But if you just cross through this lower edge of the expected move and keep right on going like it's nothing, all hell is going to break loose. Okay. They'll pull down Apple. They'll pull down the financials. Correlation will start to kick in. It's over, man. It's over. It's not over yet. There's 42 other products to sell on the screen. Okay. You getting nervous yet? You should be, because we crossed through that pretty quickly. Volatility is getting all kinds of amped up in here. Okay. He's all amped up. Just take a quick glance. Yeah, we should mellow out right now. Everybody calm down. All right, other trades that we've got on. For the most part, everything I've got on right now is pretty much right back on the dance floor. Like a 30% in gold, 18%, like Google was getting smoked. Okay. I was getting killed in Google. I think TheoTrade was down 75%. That thing's right on the dance floor now. Okay. Gold still right there. It's interesting to see gold kind of caving with the marketplace a little bit. By the way, this trade we should be damn close to a fill right now. Like, again, I'll replace it right at this price. I assure you, I could fill this probably in and around $1.40 right now. But you can see this mid price, and just keep your eye on this for a second. Look at the mid price. It's flying around. Okay. This crap's hard to price. So what I'm going to do, okay, I'm going to watch when I'm working. I replace the order. I put it back in at $1.45. So I'm sticking it back in their face. Okay, take it. No takers. Okay, this one, I'm going to come back in and I'm going to work $1.40. This is what I call banging out the order. Okay, I'm trying to get out now. Like and by the way, no one's looking at it and going like, oh, he's trying to get out. He's trying to, this is a server that's looking at it. And come on, server. I look so attractive. uh, what you would need, what you would need for that trade to work. Okay. Do you look attractive to a server? Like, oh yeah. Okay. You need to sit right on that line for a few minutes. And this is exactly what we drew on the screen. Like literally to a T, that's what I just drew on the screen. So this is your time right now to get the hell out. Okay. It's sitting on the line. So we kind of got to get out when the getting out is good. And you're like, this sucks. The $15 wide fly. It's because the volatility picked up. Okay. It did. The volatility kind of picked up in here. So as frustrating as it may be, all right, we're gonna take it and we're gonna run. Um, I can't believe they're not letting me out at $1.40. Okay. I could have been somebody, but I'm nobody. So I'm nobody. Yeah, I'm trying. So place order and come back in at $1.40. Is anybody starting to fill? Anybody filling anything in here? Anybody filling anything in here? Yeah. So I'm pretty sure. Yeah, I know $1.35 is going to fill. I'm surprised $1.40 isn't going to fill. So it pisses me off to have to do this, but oh, close your eyes. Close your eyes. I did $1.35. Avert your eyes. I want out. And I don't even care if it makes more later today. Like I don't look back at trades and go, "You bastards, I could have gotten more." I'm not doing that. We're on a line, okay, and you just kind of gotta knock it out. So, Lefty, did you really get $1.40? Are you just saying that to piss me off? That's okay. I would do the same thing. I am, and he shoots. He scores. Whatever. Whatever. So what do we have over here on a percentage basis? Hold everything. So it's a $1.35 minus was that 55 cents in there? Yes, 55 cents. Yeah, it's still 145%. That doesn't suck. Still 145%. I'm plugging my phone back in. Leave me alone, Siri. Leave me alone. Um, well, you don't talk to your gadgets over here for some reason. Like my Siri thing goes crazy, and it starts to just record everything that I'm saying. By the way, I'm starting to get pissed off that I'm like talking to random stuff to my wife, and then like the advertisement pops up on the phone. Kind of like earlier today, Garrett was actually on, and an ED pop-up ad came up. Garrett, what are you looking at? Or do they just know you're a middle-aged guy? That's good enough. There's a middle-aged guy. Send him the gas station ED pop-up ad. Okay, that happened. That happened today. So Google is not without a sense of humor. Like this guy's live and he's doing it over there. Anyway, sorry about that. I it's funny, Miguel was actually talking about the car that actually starts talking. So inside of Tesla now, okay, Tesla integrated. They have like they've always had voice control. You just hit a little button on your my yoke. It's not a steering wheel, it's a yoke. Okay. I don't drive, I fly. Anyway, it's like a little button on the yoke, and you hit the button on the yoke, and then you can just do whatever in the car. But if you hold the button now, Rock comes up. But it's they don't call it, what is it? I don't even know the name of the AI assistant. But anyway, they have Grok uh, integrated into the Tesla. And it's pretty interesting because you can have like an entire conversation with the thing, and it's real time. Like Chat GPT is still kind of delayed. It's like when you say something and you're like, okay, give me an answer. It's like, oh, is this what you said kind of thing? Grok is the best, in my opinion, conversationally. So I was driving up to Flagstaff, I don't know, like a week or two ago. I was having a full conversation with Grok. So you got to realize I'm in autopilot, so I'm not really driving the car. It's kind of driving itself, and I'm having a conversation with the exact same time. So I got that going for me. Grok doesn't control anything in the car yet. Grok is just conversationally like there in the car. It's I like literally have conversations and like complicated crap. Like there's questions I have that are complicated. Okay. In the past, and you think about like how AI kind of changes things in markets, and I'm specifically talking about markets. Okay. There'd be like a question I would have about implied volatility that I'd almost be like embarrassed to ask anybody. I'm like, why is that out of line like that? Like if I can't figure it out, there were people that I could always bounce ideas off of. But once in a while, you just miss something and be like, you idiot, there's a dividend. You'd be like, oh man. So now I have Grok to ask questions to that, I don't feel like an idiot. But Grok the other day was like, didn't you see this? I mean, Grok basically said, you idiot, didn't you see this? I did not see that. I didn't see it. I'm sorry. Okay. I didn't. Why gotta be so rude about it too? By the way, I have my Grok like turned up to be like what do they call it? Like they call it unhinged on Grok, but it's like it's like R-rated Grok. So when it talks to you, talks to you, I like my Grok to talk to me like a truck driver. It's awesome. It's not even PG-13. Definitely R-rated. I love it. Okay. I love that. It just, you know, I have to be amused at all times. Okay. It's probably ADHD, but it, I have a daughter that was saying something serious to me the other day. She's like, why do you have to make light of every single situation? And I'm like, because you're 15 years old and nothing, you say or do really matters. I didn't say that to her. I swear I didn't say that to her. I was thinking it. Every situation with a 15-year-old is the most serious situation that we've she needs to be talking to Grok. Oh man. By the way, after I'm talking to a 15-year-old, that is when I have to talk to like the therapist of Grok. Because holy crap, that's just a disaster waiting to happen there. Look at this. We're right on it. Everybody now could get filled. Everybody is filled. $1.35, $1.40, maybe even $1.45. Everybody is filled. We mellowed right to this line. Now, with this, you guys clearly are not having conversations with Grok. Okay. By the way, for those of you that are not like into the AI stuff, you should get into it a little bit, man. It's pretty cool. Pretty cool. Anyway, by the way, I do like Gronk. I'm not talking to Gronk. I'm talking to Grok. Okay. Gronk is an idiot. Grok is possibly the smartest thing on the planet. Just throwing that one out there. So there's a huge difference in there. Anyway, just looking over here. Bear with me for 1 second because I am shopping all kinds of trades right now. Ooh. All right, we're definitely headed in the right direction here for a couple of products. So inside of Google, I just want to bring this one up. Inside of Google, right back on the dance floor, there's a $13 expected move. We're trading basically 242, 235 is full profitability. We're well within expected move. The probabilities of this are incredibly high. Probability in here, check this out. Probability of touching 61% of the short strike, which is really, really high. So you're right back on the dance floor inside of Google. Bank of America is the only one that's in a real threat. Home Depot was one that, was down at one point almost 90%. Now, we're in our closing window for Home Depot, but it's right back. It's got a $10 expected move on a $409 product. It's back. It's like almost like a 50-50 trade in here. So you're kind of back where you want to be. All of this, if you look at all of my trades, they're very, very similar. Not being the bearish. The bearish trades are like the only ones I could put on because the skew is so damn high. I mean, that's frustrating, but the skew is really, really high. And in any regard, when you look at all the trades, they're all pretty much on the dance floor. And I'm going to tell you what they hinge on. All of these trades hinge on one thing, higher degrees of correlation. And it's coming. I can see it coming. That's exactly what just caught my attention is all of these trades, all of these trades the other day were moving, like one was up, one was down, dogs and cats living together, like they were all over the place. All of a sudden, okay, I'm looking at the percentages and they just snapped into alignment. I just saw like everything moved down, at the exact same time, or up at the exact same time. There's much higher degrees of correlation starting to kick in, and volatility, as I said, I think it sees it. I think it saw it this morning. It's pricing it in already. Apple is up very, very mildly in here, but look what's actually happened to the energy sector. I told you the energy sector would be one of the critical factors. It's the energy sector in terms of my trade that caught my attention. The energy sector rolled hard in the last couple of seconds. 60, 60 cents. You're like, it's nothing. 60 cents in here is something. It's right at the upper edge of the range. We're looking for it to actually crest down to the lower edge of the range. We're right back to where we want to be in that energy sector. Okay. It's not even about the energy sector trade. It's displaying, like, my whole entire portfolio right now is displaying much higher degrees of correlation. Okay. This is what you really want to look for later in the day. And as this day progresses, okay, we're threatening right now, and it is freaking amazing that we're just sitting on the edge of the expected move. So one thing I have continuously mentioned, if you are not in the know of how expected move works, you should get in the know. I mean, you got to realize I drew these lines on a screen last Friday, okay? And here we are on a Thursday, smack on. It's freaking ridiculous because the entire trading community, okay, it revolves around this. Now, okay, what we revolve around after we hit the lower edge of the expected move, okay, it's going to all be about this range around the expected move. Because the volatility has picked up a little bit, okay, it's my estimation, and delete this out, okay, we want to draw a window around this, and we're going to define that window very, very clearly, okay? The window is probably just slightly larger than about 15 points. And again, I'm just going to kind of highlight this, and I really butchered that one. Bear with me here 1 second. It's just bigger than about 15 points, somewhere in this neighborhood here, okay? That is, if you will, okay, where we're going to move on the day. And what you want to know about this box, okay, and I'm actually going to put specific levels. First of all, the box that we're actually trading within right now is specific explicitly to the SPX, okay? So if you're looking at the S&Ps, you're wrong product. This is SPX, and you're looking at it somewhere right here at 65, we're going to say 96. And down below over here, okay, is 65, we're going to say 64. You're going to move inside of this range. Everything in this range, okay, doesn't make any bit of freaking difference. Like, it doesn't matter. Oh, we're up here. Nobody gives two craps. Oh, we're down here. Okay, possibly some data that just came out. Oh, we're down here. Nobody gives a crap. It's degrees of freedom that you can move off of the lower edge expected move. If this is the happy place, okay, you're not going to sit directly on the happy place all day. You're going to ebb and flow kind of around the happy place. You break to the upside, it's a rally. You break to the downside, it's a complete crap fest. From a probability point of view, and you always want to go with probabilities in these cases. From a probability point of view, you should either sit in the box for the majority of the day, okay? Here's the thing though, you can threaten, it's lower probability, but you can threaten to break off. If we threaten to break off, you are going to know it. The S&Ps, first of all, okay, right now we're on it, you'd have to be exactly like 15, 16 points lower. So you're going to look for a price point. 65, 64. In the SPX, if we break through 65, 64, all hell breaks loose in the market in the near term. Okay. That would be what they call breaking away from the lower edge of the expected move. And what's going to happen is if you trade down here and you go slightly outside the line, you'll see these big volume spikes in the S&Ps. Why would the volume start spiking in the S&Ps? Because the entire professional world has to hedge in the direction. Okay. They would have to literally hedge in the direction, okay, of the marketplace selling off. So you're going to sell into selling, okay, you would buy into buying. In this instance, though, okay, we're fairly close to just that. Okay, we're fairly close. If you're like, oh, I don't see it, we're all the way up here. We will probably test at some point into the 65, 64. Two things are going to happen. Number one, if we break through 65, 64, higher degrees of correlation, big volatility spike. Okay, vol would come raging up. Volatility, if anything, right now has mellowed out. You want to know why volatility is mellowed out? Okay, because we're just cruising on this line. Kind of, like as I said, the whole day comes down to the lower edge of the expected move, and breaking above or breaking below it. The stuff's pretty critical, but you're trapped in it right now. So what do you do at a time like this? Sit tight. If you can trade in and around the lower edge of the expected move, then fantastic. There's some pretty good size hits though to a few of the tech stocks this morning. You can see the likes of like Meta taking a hit. Nvidia is really not. Nvidia, if anything, has got a bid back under it. Okay, and it's kind of stabilizing the NASDAQ to a larger degree. Watch this one very carefully. There's always going to be attempts at rallies in a marketplace like this. And that's where I'm just going to give you for what it's worth here. Okay, you've got, Broadcom that's down pretty good over here. Microsoft, some sell side activity that you can feel right now. Okay, Google taking a little bit of a hit, but it kind of recovered. This is what you want to watch out for today. Okay, everybody listening, because this part's important. I've said this before that eventually you start having some sell side activity, and of course I don't know if this is going to be the big one. Big one, what? Okay, I don't think that people are like, oh, when the market goes down, like, oh, it's going to totally crash. You're not even down 1% there, not even down 1%. Okay, I don't think that the markets just tank like that. I don't think that that's going to happen at all. But I think it's going to happen. Okay, and again, I would put all kinds of money on this one, and will. Okay, as we get there, what's going to continually happen is we're going to sell off, and they're going to try to buy the dip, and people are going to get ripped apart. Okay, they're going to buy or they're going to get ripped apart. This is what I talk about with when retail gets systematically dismantled. This is exactly what I'm talking about with retail getting systematically dismantled. And what I mean by that is, okay, for the most part, okay, they come in there and they try to buy dips, okay, and you start to fail and fail again. And you can see, okay, this is a almost choreographed effort inside of NVIDIA. I guarantee this is all call buying. Look at the calls being bought. This started off as a very, very negative day. Okay, for NVIDIA, it started off as, thing traded 73. It's now trading 76, up $3 from where it was. It is reaching right now to go back positive. It very well may go positive. This is where people could get destroyed. So you get a bid back under it, and all of a sudden it starts to slip back. Okay, and everybody that had everything invested in there in a day gets destroyed because the dip buy, okay, fails. It only takes a few of those to really change the way you feel, okay, about momentum of the marketplace. So you got to kind of keep your head in the game at this point, because NVIDIA right now is trying to save the whole world. Okay, literally, it's NVIDIA versus the world. Oh, you got Apple involved right now too. So there's a little bit of a rotation back into tech. Okay, now if you come to the SPX, right to the SPX, okay, we're pretty much on the number that we just talked about inside of the box. Okay, we're breaking in the box. The volume in the S&P should start picking up right here. So if I look at the S&P futures, okay, the volume will start to pick up. If we're going to break to the upside, okay, the volume will really start to pick up. It's right in this neighborhood here. As I said, look at the SPX. We're trading 97. Okay, if the volume doesn't start spiking right now, then we're going to fall right back down to the lower edge of the expected move. So this is kind of a make or break level right now inside of the S&Ps, but this is the first attempt, if you will, at a rally. Things are getting interesting right now. Things are getting really interesting. Advanced decline line has come back. So right here is where, as I said, this is where people get taken apart. Be so freaking careful, because you're going to be dip by. And if Nvidia and Nvidia unto itself slips back, okay, it's chicken's done. The S&Ps are going to get smoked on the day. Be down like 80, 90 points. Nobody will give a damn. This is where like it's kind of a make or break. Still recognize the Nasdaq is down 200 points, 0.8%. It has most definitely come back, but we are by no stretch out of the woods over there. We're just trading somewhere right on the edge of where I think that's boxed in. With that, I realized I'm eating up too much time over here. Tony Rago's got to come on. I am going to go and I'm going into part 2 of Shadow Clocks. Okay, Shadow Clocky Boy is back. But right now I've got to turn it over to Tony Rago. Hopefully Tony's actually there. I think that Tony's probably like.
I'm here.
I was just thinking you were like hovered over your coffee machine. Yeah.
Always.
It's good stuff, man. Okay.
Little heavy this morning, but they found something to fight over.
No, I was just saying, like, I think that this is what's going to take people apart. Like, there's the hubris out there in the marketplace.
Yeah.
So the hubris isn't what gets me. I'm like, oh, you're bullish. It's that translates into this is the greatest buying opportunity ever. And you'll do it and you'll get hit and you'll be like, well, son of a beep, I'm going to do it again. And you'll get hit. I've watched accounts completely come apart in 3 or 4 days. Okay. And I'm warning every freaking person in here. There are times to buy dips. Okay. There are times where you see a market that's like really frothy. And again, there are times where even if the dip buy works, I said this last week, even if the dip buy works, you don't want to be part of it. This is one of those times. Okay. You're sitting on nice gains. Okay. Don't push the edge of the envelope too hard right now. So I didn't even mention today the high flyers, okay, are getting hammered. Like the high flyers like Oklo, like absolutely destroyed this morning in high beta. And people are going, oh, there's news, there's this. It has nothing to do with that. It has everything to do with the fact that crypto is getting hit. Crypto is real close to the 110. You break 110, people are going to freak the hell out because you break 110, now you're just looking at 100. Okay. And the people are really going to start to freak out. Crypto hasn't done anything. This is the most heated marketplace out there that literally has not made an up move since May. And it's just channeling back and forth right now. All right. S&Ps, okay, only down some 33 handles. Okay. So right now, everybody's the dip buy is working. Okay. It's working. Well, for now, we did hit the lower edge of the expected move. Okay. We've pulled back up off of it. We are headed obviously to the upside. Oh, the volume though is still, it's pretty good out there, quite deep. There's some good volume spikes in here. Be careful out there. All right. Be really careful. As I said, there's times you want to be involved in a dip buy and there's times where, just let it go. And this might be one of those times to let it go. All right, Tony, it's all yours. Tony Rago's got you for the next 50 minutes over here. I got to go. I got Shadow Clocks. It's mentorship mastermind time. For those of you actually
Mega mastermind.
What's cool is today, it's no longer mega. We are not mega. We are shadow clocking. The 12 weeks was killing independent Don. So now it's 4 weeks, but I'm going to trade with people today. This is one of the coolest days, though, to learn about volatility. Like, it couldn't be a better day to learn about volatility. Speaking of volatility, it's getting crushed back. Okay. I don't see that. So it's getting crushed back in the backdrop over here. This is getting crushed back. Be very, very quiet. Okay. This market is hunting retail.
Oh, absolutely.
Yeah. All right.
I mean, it is every day, but yeah, for sure.
Yeah. Today is it's all kinds of sketchy out there today. Again, I don't mind saying that, like, oh, I could have been part of this. Like, look at the volume surging in here. It's exactly what I was talking about, volume surging and so forth. But I missed it and I could have been part of this. I'm telling you, there's times missed the damn rally because it's incredibly dangerous one. Tony, all yours.
All right. Sounds good. Let me give me 1 second here.